everyone. My name is George Walker, Chairman and CEO of Neuberger Berman. Thank you, Cena Finance, for the opportunity to speak in this important ESG summit. I'm delighted to be here sharing a few thoughts about sustainability and ESG and how asset managers like Neuberger Berman can contribute to building a more sustainable global economy. After 3 years of exceptionally strong market returns and a pandemic that forced businesses to attend to pressing social and environmental issues, some might argue that making the case for ESG investing has been easy. Now, those same voices might say that the heightened market volatility, inflation, and the potential for an economic slowdown will concentrate the minds back solely on the near-term bottom line. At Neuberger Berman, our day-to-day reality confirms the truth of the matter. ESG issues so often are the bottom line. By focusing on ESG and sustainability, we can support better functioning capital markets and achieve a greener, more inclusive, more sustainable growth for the society and our planet. To achieve that, financial institutions have a critical role to play, mobilizing capital and resources to firms and projects that contribute to sustainability goals. Impact can be transmitted from the financial systems to the real economy via various means. For example, by influencing corporates' cost of capital, access to liquidity, and adoption of sustainable corporate practices. For asset managers to make real impact, ESG authenticity is key. Getting to a more sustainable world requires the judgment to make complex decisions about where to allocate precious long-term capital. For many investors, the ESG impact of their portfolios is considered of equal importance as the investment performance. We are seeing more and more investors asking how asset managers can help them in the process, how to differentiate firms that are genuinely striving towards long-term sustainability. As an active manager, our purpose is to deliver compelling investment returns for our clients over the long term, supporting them to achieve their unique investment objectives. Neuberger Berman has a long-standing belief that material ESG factors are an important driver of long-term investment returns. ESG factors, like other important factors, should be incorporated in a manner consistent with the specific asset class, investment objective, and style of each investment strategy. Asset managers need to maintain a rigorous focus on material ESG issues, those that by definition represent a real risk or opportunity for businesses and determine environmental, social, and financial outcomes. In addition, to make positive outcomes possible, we believe asset managers should carefully look at the work in the key pillars of their ESG structure. I think of this structure as data integration, engagement, and impact. Efforts by asset managers in these pillars will distinguish authentic ESG managers from the others. Drawing on our years of experience working with clients around the world, I'd like to share my views on these pillars. First, on data. Like any other data source, ESG data should not be taken at face value. Asset managers should do their own homework to sort through meaningful information from the noise. On top of that, because ESG data is often unstructured, it's ideal for machine learning and advanced analytics, which is why at Neuberger, we are knitting our data science insights ever more tightly into our ESG analysis to ensure that we're looking for the solutions in the right places. Secondly, on integration, authentic ESG integration will enable investors to explain logically how upstream decisions link throughout all investment outcomes. At Neuberger, ESG integrated strategies now make up over 85% of our assets under management. The breadth of that ESG integration is regional as well as across asset classes. This year has seen us expand our ESG capabilities into China, where we've created a localized version of the NB Materiality Matrix, our measure of which ESG factors are most material for each industry. Next, on engagement. Why is engagement so important to us? Because we believe it is much more likely to achieve real and lasting impact than is exclusion or divestment. To us, engagement is not only about encouraging change among the laggards, but also about making great businesses realize even more of their potential. For example, in the journey for advancing net zero goals for our clients, engagement with corporations is a necessary tool to influence real economy emissions. We believe that companies should consider the long-term impact of climate change on their business model and operations, and that all issuers should identify key environmental risks to their business. Divestment is one tool in our arsenal, but as active managers, we know that targeted climate engagement can yield effective results. We also exert our influence via the industry-leading NB Votes initiative. We're the first large asset manager to provide proxy vote disclosure well in advance of company meetings. We are the only major asset management firm to bring this type of transparency to our proxy voting activities, and we continue to invite all of our peers to join us. The last pillar is impact. We believe the 17 United Nations Sustainable Development Goals to address the world's most pressing social and environmental challenges by 2030 are important to formulating objectives of sustainable and impact strategies. We've organized these SDGs into consistent investable themes across our strategies and believe that investors can contribute to the SDGs by investing in companies whose products and services have the potential to deliver significant positive social or environmental outcomes. This is an approach that we and our clients increasingly embrace in and across both private market and public market offerings. We are proud of the structure we are building, but we also recognize that this is a long-term project and that we are always learning. As the first North American asset manager to secure a sustainability-linked credit facility in 2020, we will continue challenging ourselves, linking our own ESG performance to our business goals. Together with our peers in the financial sector, asset managers have a critical role to shape how the financial system can better serve the kind of world we all aspire to live in: green, sustainable, and inclusive. There is much more to do around the world. As we continue to deepen our commitments in China, we are keen to share these best ESG practices to help Chinese companies and Chinese investors improve their outcomes with better investment returns and better stewardship. We hope others will join us, and we are honored to be here at the SINA ESG Global Leaders Summit contributing to